What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. You're getting a sneak peek into my stock portfolio and a sneak peek into my research on stocks. Today, we're talking about Chargepoint and we're talking about BLNK charging. But before we really get into it, there's something I have to ask you to do, and that's please hit that like button, comment, and subscribe if you are new. Thank you so much to all of you who subscribed. We reached a new digit in our subscriber count, so I'm turned up today. Now let's jump into Robinhood. You can see Chargepoint here. I actually recently bought more shares of Chargepoint. I have shares in other accounts that I bought back in October for an average cost around $13. I first bought shares back when it was SBE or Switchback Energy. This was the BLNK check company that merged with Chargepoint. This became a very popular SPAC, and with SPACs, they often have this huge run-up when the merger is confirmed. And then with SPACs, once the merger hits, a lot of the people who are in for the short term sell out of the stock. And I believe the downtrend we're seeing right now is due to that, as well as some share dilution to people exercising their warrants. But what this means for the company is that Chargepoint is raising more and more cash, which is a good thing. So like I said, I started buying the dip, and I think there's some levels that are going to be hit, but I'll get into that later in the video. For now, let's get into BLNK charging. I actually bought this stock back in July and ended up selling and never got back in. But you can see there's a wild ride with this one. Now, I've done videos about BLNK charging and Chargepoint in the past, so if you haven't seen those, please pause this video, go check those out, and come right back because I want to move quickly here. But BLNK charging and Chargepoint, they both design and they manufacture, own, and operate EV charging stations. They've got chargers for residential and home use, but also for commercial as well. You can take a look at the map for BLNK charging here. BLNK claims to have over 23,000 charging stations in their network. They're mostly in the United States, as you can see. When I first heard that, that's part of why I bought the stock, but I sold my shares of BLNK charging, and I actually bought 10 or 15 shares of SBE or Chargepoint because of this. Check out their map. And as we expand past the United States, you can see they are all over. BLNK says they deployed more than 23,000 EV charging stations, and they refuted claims from a short seller that a lot of those charging stations don't work. But Chargepoint clearly has one of the largest EV charging networks. At the end of 2020, they had over 100,000 active public and private charging spots in their network, and they have access to an additional 157,000 active public places to charge through roaming integrations with other EV charging networks. So if you have an electric vehicle, Chargepoint is going to offer more places to charge. And in terms of level 2 charging, they have over 70% market share, and BLNK's not even their closest competitor. Now, this comes from Chargepoint's investor presentation, so take that with a grain of salt. And you can take this a couple ways. You can say Chargepoint is the Goliath in this situation, but perhaps there's more of an opportunity for BLNK to grow and expand. You'd have to be pretty confident in BLNK's management to be able to take market share from these other companies. And for BLNK, you would also want to make sure that you're expanding your commercial side as well, landing big clients. And part of that's because you have to compete with what Chargepoint's doing in commercial, fleet, and residential. Now, again, this slide comes from Chargepoint's investor presentation, but I would say BLNK is probably where Chargepoint was 5 years ago. They're in the United States and Canada. They're in level 1, level 2, and DC fast charging. They still haven't grown to all these different markets. And I think what'll be interesting is the expansion of level 3 charging because it's much more expensive than the other two. Level 1 and level 2 take a very long time to charge, and they're less expensive. Between the station and parts and labor, you could probably be out anywhere from $2,000 to maybe $5,000. But if you're talking a commercial level 3 charger or DC fast charger, this is going to cost you $50,000. The benefit is you can get most of the way charged in about 30 minutes. Now, BLNK is expected to report earnings March 25th, but let's take a look at their last quarter. This is during the worldwide health crisis. Their 9-month revenue grew about 84% to almost $4 million. Their full year revenue for 2019 was $2.8 million. Their product sales in Q3 grew 74% to $600,000, but Chargepoint reported earnings recently. They had $42 million in revenue. Now, this is basically flat from a year ago, but you can see the impact of the worldwide health crisis here. And they talk about that in their investor presentation, but they're still expected to reach $1 billion in revenue in the next 4 to 5 years. So BLNK charging's revenue could double and triple. It could go from 5 million to 10 million, but Chargepoint's revenue is close to 150 million. They're still more than 10 times ahead of BLNK. Building out a charging network is expensive, but Chargepoint's margin is going to improve faster. They will be a profitable company much sooner than BLNK. BLNK actually had a net loss of about $4 million in Q3 with their $600,000 in sales. But that doesn't always matter to investors. I want to jump into my quick analysis based on rough estimates. If you want to know more, check out my How to Analyze Stocks video. But we've got their stock prices here, their market caps. I like to look at the market caps because you can see that Chargepoint is the much bigger company. For both of these companies, their shares outstanding is increasing. As the number of shares increase, current shareholders are diluted. From April to September, Blink Charging sold more than $3.5 million of stock, and they raised $19 million. And jumping down, Blink's 12-month revenue was only $5 million, so they're losing so much money that they need to raise a lot of money from investors. Chargepoint's doing the same thing, but it's at a different pace, and they just launched onto the stock market that comes with basically a big bag of money. They have over $600 million on their balance sheet. But again, both of these companies are reporting huge losses, so they don't have a PE ratio or price to earnings ratio. They have negative earnings. That's why I like to look at their price to sales ratio, because this is basically the market cap divided by their revenue. Now you want this number as close to 1 as possible. So both of these numbers are very high. Blink is obviously very, very much overvalued. Chargepoint is still higher than the average price to sales ratio for tech. They're even higher than the price to sales ratio for Tesla, which I believe is in the 20s. And so the lower this gets, the more attractive this stock looks to me, because even though Blink Charging has better revenue growth, and we'll see if they can grow even more during their earnings, Chargepoint is the clear leader here. And there's basically a direct correlation between the amount of EVs sold, this light blue line, to Chargepoint's revenue. And so while the worldwide health crisis had a big impact on vehicle sales in general, there are a lot of announcements about what's going to happen for EVs in the future. GM is saying they'll only sell zero-emission vehicles by 2035. Ford says their entire commercial lineup will be zero-emissions capable, all-electric or plug-in hybrid by 2024. Volvo's going all-electric by 2030. Volkswagen laid out its plans to surpass Tesla and become the world's largest seller of EVs by 2025. Oh, and President Biden wants to roll out 500,000 new EV chargers. And so that's just a taste. For these companies, their revenue growth can give you an idea of what they've done in the past, but a lot of where the stock is trading now is based on what they could do in the future. They have all these tailwinds like potential fossil fuel bans, government can offer a lot of subsidies, government can drive a lot of the cost reductions, and even major automakers making these commitments can, and I believe will, play a big factor. Now I want to make this clear. Do your own research. I'm not a financial advisor, and this is not financial advice. If you're to follow my journey, great, because these videos are for entertainment. Okay, so the last thing I want to do, and I really want to do this quickly, is show you the simple moving averages. These are technical indicators that give us a sense of where the stock is trended and where it may be going. So here we go. The green line is the 20-day moving average, the red line is the 50-day moving average, and the orange line is the 200. As you can see, the lower the amount of days, the closer it tracks the stock price. When a stock is in an uptrend, I like to see this pattern. But when a stock is in a downtrend, the 20-day moving average goes below. And if it's really in a downtrend, the 20-day moving average will go below the 200-day moving average. And so you can see we're at an inflection point right here. And stocks don't like to go below this 200-day moving average for too long, especially good companies. If it does close the day below, I think we could see levels closer to 16, like how it traded in November. But I believe this would be severely undervaluing the stock. Now let's take a look at Blink. They're also kind of in a downtrend, or perhaps consolidating. They're nowhere near their 200-day moving average, but earnings can be tricky. If they have absolutely amazing news, they could go up, but in this market, investors have been selling at any sign of weakness. I'd say there's just as much upside as downside. This is not something I want to be in, because eventually they have to grow into this valuation. Their revenue's around $5 million, and they have to prove that they're a $1.6 billion company. And Blink has a lot going for them. They're smaller, so they can post bigger revenue growth numbers. And they were one of the first EV charging companies to the market, which leads to kind of a first mover's advantage. And I mentioned they had a short seller report. Well, I imagine they crushed all those who were betting against them and shorting them. The question is, where do they go from here? And I might want to do an update after their earnings. But I want to hear from you. Where do you think these companies are going to go? Drop a comment, leave a like, subscribe if you're new. Thank you so much for watching. I really appreciate you. Shout out to all my international viewers. Y'all leave comments every day, and I really appreciate it. My laptop's at like 2%, so I'll see you in the next video.